Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Don Durrett, author, investor, and contributor to Seeking Alpha and founder of goldstackdata.com. Welcome back, Don.
Thanks for having me. Appreciate it.
Yeah, it's an absolute pleasure having you back. So, Don, silver and gold has taken off this past week. Do you believe we hit the bottom, or what do you think?
I've been doing this for a long time, and so I consider breakouts to occur until we get confirmation.
Hmm.
And when there's certain confirmations that I consider very important, I'm much more skeptical. So, I mean, if you look at this gold breakout, I mean, we traded at 1616 last Thursday, the Thursday before last, which was, it was unbelievable all the way down to 1616 intraday. There you go. That red one right down there. And then we went from 1616 and today we're at 1771. And most people are thinking this is a run. We love these runs. I've seen lots of runs, over the last 20 years. And when these runs start, they tend to really, be, significant runs. But this one is missing two important confirmations. Usually you only need one confirmation. It's usually silver. If silver confirms behind it, you're kind of happy.
Here's the silver chart, and the silver, just to an amateur, I'm not a technical person at all, but it looks like it's breaking out too. So why would you consider that a breakout?
Nope. In this instance, the two confirmation numbers are kind of odd. The first one is the S&P. And the reason why the S&P, usually this wouldn't be the case. You can bring up the S&P chart. The S&P chart will bring up the two charts that aren't confirming these breakouts and why I think these breakouts are false. And we're going to go back and retest that line.
Okay, this is the S&P 500 chart you wanted me to
All
put
right,
up.
so this is the problem for gold right now, is that we're heading into a recession. And everybody knows it. So we've basically been in a one-year correction. It started in October of last year, where the stock market basically peaked at 48.18. And you can see there in April, we almost went all the way back and retested 48.18, but we didn't. And then we've had basically five moves over this since October. This is the fifth basically correction. I mean, if you look at the peaks and valleys on this correction, going back to October, we started there. It's basically October 21. So keep going forward all the way up. So you're basically too far back. October 2021. Yeah. So you can see
There
right. That's right there. That's when we at top. So that's when we had that first correction. That was the first correction there. And then it started going back up. And then we started having these up and downs, up and downs, up and downs. But we've had basically lower lows. We have not had one capitulation day. If you look at the volume for the last year, there hasn't been a single high volume day. So it's just been steady selling. Wall Street knows we're going lower, but they keep buying these rallies. And right now there's all this bullishness that we're going to go to we're going to have a year-end rally, right? And, possibly we will, but you can see that it's got a lot of work to do to get back up to 4,800, right? We have two peaks. You got a little over 4,200 and you got 4,600. Well, it's not going to make it. It's not going to get all the way back to that top. So we're going to get a lower low. And my target is 3,300. So to go down to 3,300, that's a lot of selling. You're looking at 4,000 right now. That's 700. That's 700 points.
Down here, you think we're going?
That's 700 points that we're going down because we're going into recession. All this talk of we're going to have a soft landing is fantasy. We're not going to have a soft landing.
Well, you know what triggered it for me was Amazon just announced the other day that they're firing 10,000 people before the holidays.
Yeah, there you go.
When was the last time you saw Amazon doing layoffs before Cyber Monday and before for the Christmas season?
Well, absolutely. That's a good omen. But what people are really missing is that COVID and the Ukraine war damaged the U.S. economy significantly. The relationship between the United States and China is, in some respect, is broken. Today, we had these press conferences, and it was kind of a kumbaya thing. Neither side was basically saying anything negative to the other one. So we have this kind of this broken relationship with China and kind of these, broken supply channel. And I don't think that's going to be repaired anytime soon. And then you also have Ukraine, which has disrupted the cheap energy that Europe gets, which is disrupting the European economy. Then you have COVID, which has disrupted, small businesses in the United States. So I think we're heading into a recession. So if we're heading into a recession, we're going lower here on the stock market. And people talk about the prices, the earnings for the S&P 500. Right now, the expectations for earnings for next year are positive. So they're looking at $225 for the earnings for the S&P next year, which is up a little bit from this year. Well, it's not going to be up. It's going to be down. So if the earnings are 200 or lower, then the market has to go a lot lower. And it's going lower. So since the market's going to go down 900 points, in my opinion, over the next, say, 3 months, then gold is going to have to fade that. And the odds of gold decoupling from that type of pressure, that 600 point, 700 point downward selling pressure, is almost impossible. The only way you would get that type of decoupling is if you had some type of a black swan that scared people so much that they wanted to hold on, not only want to hold on to the gold, they want to buy more. So black swan is possible. You could have the BRICS basically coming out with a new currency. And when they come out with a new currency, I would be afraid of the dollar. The dollar would drop, gold would go up. That's a possibility here. But that's a big hurdle, and that's a big non-confirmation for gold going higher. We need a bottom in the markets, and we don't have one yet.
When you look at the silver chart, it looks very similar to the gold chart.
There's
the gold chart, there's the silver chart.
Yeah,
you're saying because you don't see what you want to see in the S&P, but what about like the DXY? The dollar index. Let's talk about that.
And it looks a lot like the gold and silver chart, right? And that's the reason why gold and silver broke out. But the problem here is that I think that the dollar has to go lower in order for the breakout to continue. Now, so the dollar basically is going to have to go all the way down below 103 and possibly below 100 for gold to keep rallying, if you will. Any type of bounce in the dollar is going to hurt gold. And so how far down is this dollar rally going to go?
Zero.
I think it's going to hold 106, bounce here, and go back up to 110 and maybe higher. That's my expectation. I think 106 is going to hold. I don't think we're going to go back and touch that line. Maybe we will. It's possible we can go all the way back up and touch the line.
But you do think the dollar has peaked already? 114 was sort of the high?
Yes, almost 115. Yeah, we got close to 115 on intraday. So, I think there was some intervention that really took it off the top, when it was up there at 114. You can see the selling. There was 4 red candles there from the top. Those 4 red candles, I think, were intervention.
Oh, right here?
Yeah, those 4 down. Yeah, I think that was intervention. And then it bounced. And then after that, I think that was market forces. I think they weren't so much intervention. I think it was kind of market forces just bringing it down. The market basically kind of giving up on the trade. But now I do think that 106 is going to hold here. We'll see. But my problem as a confirmation is I think we need to get all the way back down to like 95 to get an all-time high in gold, to get to 2,000. So the dollar's got a long way to come down here for gold to keep its rally going, to keep its run going. Right. You remember, we've been in a 26-month correction. So if you can bring up the gold chart here, we can look at this 26-month correction. And the 26-month correction has had a lot of up and downs. So there we go. We go back to August 2020, and you can see a lot. Okay, you can see a lot of peaks there, a lot of moves. See, look at those peaks. 1, 2, 3, 4. Right? We had 4 pretty big runs. Yeah, those 4. There you go. Lower highs, right? Indicating we're probably going lower, and we did. And so those peaks and valleys show a lot of volatility in gold, which we're going to see if the dollar just doesn't keep going down. What gold's going to do is keep getting these fake outs. It's going to go up. It's going to go up, and it's going to go down, right? Just like if you go back, to 21, you see a couple big runs, and then boom, they just dropped. They didn't make it. So that's what's going to happen here. I think, is that, because the dollar, I don't think the dollar is going to keep going down, 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 down. Mm-hmm. And now we can talk a little bit about the Fed, which is another indicator and is another confirmation thing that you have to look at. The Fed, I don't think that they're going to aggressively keep raising. As a matter of fact, today they came out. Brainerd came out today and said we're going to slow down. Mm-hmm. She basically signals that we're only going to do 50 basis point raises from now on. So what that's going to do is it's going to kind of cool the jets a little bit on the dollar, because they're not going to be doing these big, massive 75 point raises anymore. And I wouldn't be surprised if this is the last 50 basis point raise.
Yeah.
Because now this is now they're going over 4%. I think you go up to 4%, which is easy to do. Now anything above 4%, you start to break stuff. Now it's becoming too expensive to buy a house, too expensive to buy a car because of higher interest rates. Now they're starting to break stuff. So I think now the dollar's not going to have a lot of that mojo going, because the Fed's not going to keep raising.
Right.
And we're getting closer and closer to when they pause. And when they pause, the dollar's going to come down. Simultaneous to that, though, I don't think the dollar's ready to crash right now, because the Fed is going to raise in December. So if they're going to raise in December, that's going to protect the dollar a little bit. And they're probably going to be very, very hawkish in that meeting, which is going to protect the dollar a little bit. That's why I think the dollar is going to probably bounce here and possibly go all the way to 110. Maybe not, somewhere there, 106, 109. But I think we're going to see a rally in the dollar.
All right. Well, Don, let's change the subject a little bit. How do you play this? I mean, you're known as a stock analyst. I mean, do you, where's the safe place to be in this market if people are playing the mining stocks? Do you play the big producers?
So I'm overweight producers, always have been. And the reason why is because I'm in this for the once in a generation bull market, where gold goes to basically over its all-time high, which was in 2075. It goes over the all-time high, and it stays over the all-time high for like 2 years, and it goes to 3,000 or higher. That's what I'm in this for. I'm in this for the big money, for the big returns, for the big runs. And so from that standpoint, the producers are always going to participate in that type of run, because their balance sheets are going to improve and their margins are going to improve. And that combination makes the producers really explode. But, the producers can go bankrupt, whereas a lot of times the development stories or your drill stories, they don't necessarily go bankrupt, but they go down. But your producers can go bankrupt really fast. So there's a lot of risk there. But if you get a strong producer, there's probably not going to go bankrupt, and it's going to be around when this run comes. I have a Substack. On my Substack, I have a list of my favorites. And then the list of favorites, I think there's 25 names, something like that. And then I also have a list of all call them expected winners. So I have like 20 silver names that I have that are expected winners.
So Don, can you focus on two names that, just as a suggestion for the audience that might be a good high risk, the right risk reward for this kind of environment right now?
Okay. Yeah, definitely. So the first one, it really got my attention that I came away really excited about from Beaver Creek was Aya Gold and Silver. And the one thing that I really liked about the company, the team, they had the CEO. I was really impressed by the guy. He wasn't involved in mining at all. He was doing philanthropy work for like 15 years, basically giving away money. And for some reason, he got interested. He said, I'm going to go and build a gold mine. And he did it. He ended up selling the company for $1 billion. It was kind of on-the-job training, if you will. So after he sold that company for $1 billion, it was Sibanye. I think it was Sibanye. No, it wasn't Sibanye. Something similar to that. Anyway, after he sold the company, he found this project here in Morocco, and he brought in all of his guys, all his team. At the time, this project didn't have anything. All it had was he brought in his geologist, and the geologist looked it over and said, "Yeah, it looks like a really good potential, a lot of potential, right?" And they started drilling it, and they found a lot of high-grade gold. I mean, silver. It's Zgounder. So Zgounder is basically 200 million ounces. And it's high grade, and they've taken their time with it. So they started small, which I like. So they're only producing like today they're only producing about 1 million ounces of silver. But they've drilled this thing for like 3 or 4 years. They've taken their time. They haven't spent a lot of money. They have $80 million in cash and no debt, which is a really good balance sheet. And they're going to expand production. There you go. 2024, they're expanding production 8 million ounces. And you can see the high grade. The M&I is 96 million at 300 grams. So it's basically they're going to go from a small producer to a mid-tier producer. But that's exciting in itself. But what makes it more exciting is, again, I really like their management team. They know how to build mines. They know how to operate mines. Strong team, really strong board, which is, I think is important. This is a company that's not giving this away, but they have these other properties. So on your screen there, you see Boumadine. Boumadine, they think it's already basically a discovery they're drilling out. It has some of the same high grade, high width silver drill holes as Zgounder. They think Boumadine is going to be as big as Zgounder. So that's basically their second mine. So they're going to grow. I'm only valuing them as a 10 million ounce producer, but I think it's going to be a lot higher than that. They have a lot of drill targets. There's a lot to like about Aya. I think Morocco is a safe place to mine. A lot of people said it's in Africa. It has too much risk, but I think Aya is a really exciting story. We'll see how it works out. The other one that I like a lot is a little bit higher risk. It's Silver X. And what I like about Silver X is it's a low market cap. They have 80 million ounces of silver, plus their AGEQ is about 150 million ounces. And it's really started to run here, and because people are really starting to notice it. So they've been expanding production. Their production's now up to 2 million ounces a year AGEQ. So it's basically a small producer. I expect them to grow. You can see the nice production growth here from April to October. And so, they've been executing really well. On this slide, you'll see where it says 15 ounces per ton AGEQ. That's really high grade. And so they haven't done their financials. The last time they did financials, their all-in costs were very high. But now I think their costs are coming down. I'm thinking that they're making right now, we're at almost $22 silver. I think that they're generating free cash flow here at 22, and they might be generating free cash flow below. So it shows here, it says, note, silver equivalent ounces for September for silver was $20 an ounce. So I don't know. That's not necessarily probably AISE. So, they are high cost, but I don't mind at this point in time. I think that
as they scale up their production, their average cost per ounce drops.
Yeah, they should drop a little bit. But on top of that, as a speculator, if you're going to invest in silver mining companies, you're a speculator. As a speculator, I'm expecting silver prices to be next year to be above $25. So companies like, Endeavor Silver that are, high 22, 23, I'm not that worried, because I think that next year, as long as these companies are going to survive for another 6 to 12 months, I think we get over 25. And I'm willing to take that risk. And once we get over 25, these companies start generating free cash flow. And what I'm really in this for is when silver runs from 30 to 50, I really value companies at $50 to $100 silver. I value them at 100, but I look at 50 as well. But I'm looking at the long term. The next two runs for me is 30 to 50 and then 50 to 100.
So you think we're going back to these highs of here? I gotta go out to the monthly chart now.
Yes, I really do. I think that once we get above $30, I think that we're going to 50. I just don't think we're going to go above 30. and then go to 35, 40, and then roll back down. Mm-hmm. I think once we get above 30, the next stop is an all-time high. And my feeling is that gold is what's really.
You think this is where silver's going, right?
Yeah, and it's not silver that's really going to go there. It's really gold is going to go take off because of systemic risk. Gold is big brother and silver's little sis. And little sis is basically, silver's kind of the feminine metal that you can't understand. And gold is more solid. It's easier. It's kind of, men are easier to understand.
Okay, so here's the gold chart. You think gold's going to 3,000? What do you?
Oh, absolutely. Yeah.
In what time frame?
24 to 36 months. I think so. I think
that'd be like 2025 or so.
Yeah.
Okay, so that's basically where you think gold's going, right?
Absolutely, yes.
Nice. All right. Well, hey, I'll go with that.
Yeah, and so that's where I'm really valuing these companies at much higher gold and silver prices. So, I mean, if we look at SilverX, it prints as a 10+ bagger at $100 silver. And if that's at $3,000 ounce production. So if they can grow their company and you want to bring up a couple of charts on SilverX. If we look at their drilling, where they can drill, yeah, there you go. So you can see they have 4 areas that they can drill. And so they have a lot of exploration potential. Plus their management team, they're aggressive. I mean, I talked to them at Beaver Creek, and they're not satisfied with a single property. They're looking for another one. This is a company that wants to grow. I really like it. So they got exploration potential. They have a lot, and I think that this is ultimately probably going to be a 5 million ounce a year.
They're consolidating everything in this area of Peru because they've got the mill, they've got the production facilities. Right. So they're just acquiring all these stranded assets around them just to make it vastly more efficient.
Yeah, and the CEO, Jose, I really like him. He's a young guy. I don't even think he's 40 years old, or he's 40s in his low 40s. But he's a young guy. This is his first project as a CEO, and not only does he want to make it work, but he wants to build a big company. And I like that. He's like, that's his passion. His passion is to build a big company, and I think he's going to pull it off. Yeah, I don't think they're for sale, which I like that a lot. Nice. I think they want to grow, and this is a good story.
Yep.
And it's cheap, and it's still super cheap.
Oh yeah, it's only a $60 million market cap, so it's one of those that could definitely easily be a 5. You see silver get up to 25 or 30. You could this is easily a 3 bagger, 5 bagger, and then possibly, as you said, maybe a 10 bagger if silver really gets going.
Right.
But hey, Don, thank you very much for joining us. We appreciate it, and we'll touch base with you again in the next few months as things develop.
All right. Thanks for having me on.